Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Tuesday, August 15th, 2017, and this is the Daily Report for Gold and Silver. Strong downside pressure in the precious metals as tensions subside between the current conflict of North Korea and the United States as China steps in, vowing to sanctify the sanctions set up by the UN. We have a pretty strong downside move in gold, currently off about $13.50, trading at $1276.90. It is traded to a low of $1272 and change, and the high, which isn't as important, $1287.70. We did pull profits as our stop was hit this morning. We will cover that in detail when we look at our first chart. Net change in gold, a loss of approximately 1%. Silver trading under much more significant pressure, losing almost 3% on the day, down 50 cents or close to it at $16.62. Equity markets moderately higher in the Dow Jones Industrial Average, closing just below 22,000, and slightly lower pricing in the S&P and the NASDAQ. Dollar did close higher on the day. We certainly have gold trading under strong pressure today, currently trading down about $12.50, a net loss of about a full percentage at roughly $1277.90. That is our current print. Of course, we have a combination of events that have transpired over the last 48 hours, which has effectively removed a lot of the premium that was added to the price of gold last week as tensions mounted between North Korea and the United States. The Chinese came out on Monday supporting sanctions and saying that they would be a part of those sanctions against North Korea. That, along with the fact that we had the top military officials from the United States arrive in South Korea yesterday to present a unified position on our current North Korea strategy, has definitely taken the bubble out of gold. And as you can see, gold is currently trading off about $12, $13 on the day. We talked about the fact yesterday that the one thing that I felt could really remove these premiums very, very quickly, deflate the price, in other words, was if the Chinese effectively stepped in and said that they would be supportive of the sanctions. That's exactly what happened. If you recall from yesterday's show, we talked about the fact that on our daily candlesticks, we identified a pattern called an engulfing bearish. That is this two-day pattern. It occurs after a defined uptrend in the market. We can certainly say we've met that criteria. You have the current candle, this red candle, which has to be a down day, meaning it closes below where it opened, totally engulfing the prior green candle. The smaller the green and the larger the red, the stronger that pattern is. But you cannot take that without a confirming candle, and that is precisely what we saw today with gold breaking hard and breaking below what I have believed has been a level of support in the market that would have held if we were to see this market immediately move higher. As such, we did get stopped out of our trade, and we got stopped out with a small designated profit. We went long this market last week, roughly at $12.70. And as you know, my suggestion was to place our stops below $12.80, as low as $12.78. So traders are out somewhere between $78 and $80, taking between an $8 and $10 gain on this trade, coupled with the last trade where I believe we pulled about $30 out of the market. We are certainly moving profits onto our side of the balance sheet, so to speak, and are currently flat with no active trades. So traders, now that we have actually seen the engulfing bearish confirm, we got that today and we're sitting flat in the market. The real question is, where could we look to see gold prices go to over the next week or so? To that end, I have put up on the screen a single fib retracement that simply accounts from the total length of this most recent rally, roughly $100, that starts at about 1204 on the bottom, up to approximately 1298 on the top. The first level that we certainly want to look at is going to be 1276. 1276, of course, is a 23% retracement. We had the market's low today, which came in roughly at 1272. Absolutely take that out, but at the same time, we closed or are effectively trading just above it. As I said, I certainly believe that the level of support in the market I had felt should come in around 1280. And even though we got stopped out, it does appear as though, at least for now, we do have some support at that price point. However, if that does not hold, the next real target or area that we want to look at is going to be 1262. That is the 38% retracement. And below that, of course, is a 50% at 1251 and a 61.8% at 1240. However, I would think that if we continue to see this market trade under pressure, we probably won't see a track lower than 1262. We pulled profits on our trade. My recommendation is to maintain our current neutral stance and await our next signal for our next trade. And traders, strong economic data, retail sales that were released today, along with a apparent lull in the current tension between North Korea and the United States, have been supportive of the US dollar as well as US equities. As of 10 o'clock when we are recording this insert, we have the Dow Jones Industrial Average trading up about 8-9 points. But what is significant to me, even though it's a psychological level, is we are back at 22,000 on the Dow. Now, the dollar has been pretty resilient today. You can see that it's well off of these highs, but at the same time, it's currently trading up about 0.4%. And the question is whether or not recent lows in the market will be indicative of an area of support that come in just above 92. Traders, truly a significant move, downside move in the precious metals today, with the entire complex trading strongly under pressure. As I said, gold down approximately $13, $14, and we did pull profits when we got stopped out. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.